Good afternoon, everybody, and welcome to the weekly Broker Moves Review for Friday, 27 November. My name is Carl Capolingua. I'm the market analyst over here at Think Markets. It is a pleasure to be your guide on the week that was in terms of broker upgrades, downgrades, and everything broker-related. We'll get to that and more after we talk about the Think Markets difference, $8 flat rate trades, your own holder identification number, and unlimited phone support. 3 fantastic reasons why you should think markets before your next ASX share trade. The agenda for today is to have a look firstly at some of those ratings upgrades and downgrades. Then we'll have a look at some of the price target increases and decreases and have a look at one stock of interest for this week. The upgrades, only a few for the week, pretty quiet week overall from the brokers, but we did see Ampol getting an upgrade from neutral to buy. From UBS, Ampol during the week said that they would repurchase $300 million worth of shares. It's worth about $1.20 to shareholders, and brokers were pretty positive on that. We also saw a pretty big bump up from UBS in the Ampol price target to $33.70. Still implies about 10% upside from the current share price. Citigroup had a little bit to say on a few of those retail-oriented stocks. Accent Group getting upgraded from neutral to buy. City Chic Collective also neutral to buy. Saw a price target increase of about 30% for Accent Group, so a nice bump up there. But at $209, that price target is a little below the current share price. $320 on City Chic Collective, and Zip got upgraded from sell to neutral. At least it's a bump in the right direction, and the price target getting increased to $670. Okay, having a look at some of the ratings downgrades. Ampol just saw an upgrade there. Here's a downgrade from Morgan Stanley from overweight to equal weight. Price target 31. Morgan Stanley basically saying that with the recent share price gain, there's less potential upside given their price target. Macquarie on Atlas Arteria from outperform to neutral. Also citing recent share price appreciation as potentially undermining the valuation of the stock. Insurance Australia Group downgraded at both Citigroup and Morgan Stanley, and we did see price target decreases there, quite a substantial one from Morgan Stanley. Nine Entertainment Group from buy back to neutral, but a big bump up in the price target from UBS. Orica was definitely featured a few times from brokers. There's a downgrade here from Jefferies, and we're going to see a bunch of price target decreases in just a little while. Oil Search from buy to neutral at Citigroup. They did cite also the recent share price strength. South 32 from overweight to underweight, and that price target there is in Great British Pounds. Sydney Airport from outperform to neutral, again on recent share price strength from Macquarie. Having a look at some of the price target increases, Ampol got 3 there, Credit Suisse, Jefferies and Macquarie on the back of that share buyback, well received by the brokers. Brickworks got a couple. Just looking for the main ones here, Harvey Norman. We'll discuss that a little bit later on. They had a sales update, quite good. Brokers liked it. So a couple there from Jefferies and Morgan Stanley. Monadelphous Group got a couple, and a couple of nice ones really from Macquarie and UBS, up 15 and 21% respectively. Jefferies on Mesoblast, and then down the list into technology. One got a couple on a trading update, 11% bump from Macquarie to 9.15, and from UBS to 8.45, but noting that the share price is already above a couple of those targets. Having a look at the price target decreases, Kogan got a couple there. 18% decrease from UBS. The big one, clearly Orica. They had a trading update, not very well received by the brokers, but I do note that those price target decreases were fairly mild, weren't they? So anywhere between sort of 0 and 5%, and most brokers still seeing some upside in the share price from here. And to be fair, we've got a buy from Citigroup, it looks like, outperformed from Macquarie, and UBS had a buy as well. Okay, Harvey Norman, as I said, 30% odd increase in sales in the 4 months to the end of October. That's compared to the same period in 2019. On track to deliver a nice spike in net PAT overall if you extrapolate what they think is going to happen out over the course of the year. Citigroup retained their buy rating and their $5.20 price target. They said that they continue to believe that the stock is well placed to take advantage of this upturn in the housing cycle. They reckon that the market's not appreciating the full value within Harvey Norman at the moment, and also sees a particularly strong period coming up into year end. Jefferies increased their price target from 550 to 580. They were impressed with the trading update, in particular the sales increase, and they are now expecting a 35% increase in net profit after tax for FY21. Morgan Stanley liked the profit growth, upped their price target to 530. In terms of broker consensus, we've got 3 strong buys, 5 buys, 2 holds, no sells, no strong sells. That's good for Harvey Norman. The average target, about 506, which gives you a little bit of upside from the current price around 480. Maximum target there at 580. I think that would be Jefferies. Gives you quite a bit more upside. Having a look at some of the fundamentals and the PE, and these are 1-year forward estimates from the brokers at about 10.5, which doesn't sound expensive at all. And when you couple that with a dividend yield approaching 7%, I think it sounds like a very, very strong investment case here from Harvey Norman. If there is a little bit of a caveat, it is that the brokers are expecting the price-to-earnings ratio to rise based upon a constant current price to 14.61 for FY22, and that's because many of them don't think that the current boom they're seeing in sales is going to be able to be sustained for that entire period. But even at 5.38%, that dividend yield is still pretty impressive. If you then pull it back to the chart and say, okay, well, that's all talk. What's actually happening with supply and demand? Well, there's clearly more demand at the moment because investors are liking the fundamental picture for Harvey Norman than there is supply. There is a little bit of supply here, and it's not uncommon to see supply kick in at old highs. So this old high in February should tend to act as a supply point. We've seen that, but the demand has been solid, as evidenced by that very stable short-term uptrend now turning back to the upside, and that long-term uptrend very much intact. So if we can break through this 490 level, then we should see prices sustain, I would believe, above $5 in the not too distant future. So Harvey Norman looking pretty good. Okay, that's it for me today in terms of Broker Moves Review. You can catch all of our analysis at the market news section of the website. You can follow me on Twitter if you like. There's also the Think Markets handle. Next week, we'll have an Ask the Experts webinar and also the weekly Think Tank coming up Monday morning. Okay, don't forget, Think Markets is a regulated Australian broker. We do have some products that could see you lose more than your deposit. So before you act upon any of this general advice, make sure you consider all of these things. Give us a call or consult the website for further details. It has been a pleasure to be with you. Have a great weekend and all the best for your trading. Until we catch up again, bye-bye for now.